Hey guys, welcome to the Max Invest YouTube channel. In today's video, we're going to be breaking down some of the recent news in the cryptocurrency space, and then we're going to be looking at a few of our charts that we like to look at. Every single Sunday, I like to do a weekly update of what's happening generally in the market and how we're navigating this market cycle. Of course, if you enjoy the video, remember to like and subscribe to the channel, and remember, nothing in this video is financial advice, and you should always do your own research. So let's get into the news in the general cryptocurrency market and the crypto space. Now, this week has been a pretty boring week once again. The cryptocurrency market has just been trading sideways, just chopping around and not really doing too much, as we've predicted on this channel. We don't really think that Bitcoin's going to drop too much or increase too much. It should just continue to trade sideways, and as a result, not too much news or too much fundamental changes are coming out. However, there actually has been a little bit of news on the Ethereum ecosystem surrounding a couple of different cryptocurrencies. So, the first big bit of news that I want to discuss is there's a game on the Ethereum network that has recently become very popular. This game is called Axie Infinity, and it's basically a Pokemon style game on the Ethereum network that anyone can play. You do need to spend a little bit of money to actually start playing this game by buying the initial creatures to play the game with. However, you can sell these creatures when you're bored of playing the game, and this could give you a potential to make more money or lose money on the game, depending if it increases in popularity or not. So, essentially, this game is actually going to help the Ethereum network fundamentally. This is because it's launched off the Ethereum network, meaning the game does need to pay gas fees to the Ethereum network. Moreover, whenever people buy any creatures on the game or anything like that, they do need to pay fees through Ethereum, and people actually do need to buy Ethereum to buy anything on the game. The only currency that's used on the game is Ethereum, and you need to connect your Ethereum wallet to the game. This is a very interesting thing, and currently Ethereum has tons and tons of DeFi on it. All they really have is DeFi. However, it's good to see a few new decentralized applications being launched off Ethereum that don't relate to finance and help the Ethereum network. I think this really emphasizes how Ethereum can do everything and is currently doing everything. So, the next big bit of news that I want to discuss is called Aave Pro. Aave is a cryptocurrency lending and loaning platform, so you can lend your cryptocurrency or you can borrow cryptocurrency off the platform, and you can earn yield on it. However, right now, not too many big institutions have been using lending and loaning on cryptocurrencies. This is because Aave doesn't actually meet a lot of regulatory requirements for these institutions to use, and as a result, Aave hasn't really been able to fully unlock its potential. However, Aave have just released Aave Pro. Now, Aave Pro is governed by the Aave token, and it's decentralized just like Aave. However, Aave Pro goes by a completely different set of rules as to what Aave does, and this set of rules is exactly aligned as to what institutions in the US need for them to actually use the platform. So Aave Pro is literally designed for institutional lending, and that's what Aave have done it for. This is because there's a lot more money in institutional lending that should really help a lot of DeFi. Now, this is fantastic because it means institutions are going to start using decentralized finance. Institutions are going to start staking, yield farming, and using DeFi, which is overall going to make the space so much bigger. So I am very bullish on this news, and I think it's great. Compound is a competitor to Aave as well. Compound have also released Compound Treasury to do exactly the exact same thing as Aave Pro. I'm not sure which one released first, to be honest. However, I do think Compound Treasury is launching a little bit before Aave Pro is fully launching. So this is overall great for DeFi, and I would love to see how these go and how many institutions adopt this in the coming years. So, the next big bit of news is that JP Morgan have just released a big report surrounding Ethereum, and they have said ETH 2.0, so the big upgrade to Ethereum where you can stake your ETH and it makes Ethereum a lot faster, could kickstart a $40 billion staking industry by 2025. So JP Morgan believe that all of these institutions are going to be staking $40 billion worth of Ethereum by 2025, which is a huge thing for a big bank to say, and I do believe that if JP Morgan are coming out with this news so early, I think JP Morgan will be amongst the people who are staking Ethereum. So this overall is very bullish for Ethereum, and it is looking great. So, overall, the main thing that I wanted to get at is that the fundamentals have actually improved for cryptocurrency. All the cryptos are continuing to get fundamentally stronger and more adoption. Now, many retail investors and retail traders only look at the price. When they see the price going down, they think it could be over and the fundamentals are going away. However, it's pretty clear that the fundamentals are staying strong right now and everything is doing pretty well. So this is basically what I would expect, and I do think eventually the bull market will continue. However, basically Bitcoin has continued its sideways trade. When we saw the initial drop all the way back at the end of May when I started this series, I speculated that perhaps crypto is just going to trade sideways. I don't think it's going to drop down too much, but I don't think it's going to come back up because a lot of people do think the bull market is over. So I was thinking that with Wyckoff accumulation and a lot of other things playing out, I think that cryptocurrency will probably trade sideways for around 6 months. And this has happened before, so it's not like this is a new thing. We can see all the way back over here in 2013, there was an intermediate peak in the market cycle. Cryptos then dropped 75%, however they continued up 6 months later and they continued to do well. This was not a multi-year bear market, and it doesn't always have to be a multi-year bear market. Right now, cryptocurrency is just trading sideways, and if we look at the fundamentals, I do think eventually Bitcoin and all of the other cryptos should go back up together in unison, and we should see a lengthened market cycle with slightly diminished returns. Moreover, another interesting thing to look at is the Bitcoin dominance. As we can see, Bitcoin dominance is getting up near to 50%, and it has increased from its lows. Generally, when Bitcoin is doing really well, everything is doing a bit better, and when Bitcoin is doing really bad, everything's doing a bit worse. This is just because of the volatility of the given cryptocurrencies. So let's take a look at a couple of the channel's favorite cryptocurrencies. Now, Ethereum is more or less doing the same thing, and I did recently do an update on Ethereum, so I won't go too much into what Ethereum is doing. However, it does look like Ethereum's had a healthy pullback, and it is trading sideways like the others. Now, Chainlink's one that we like to look on the channel a fair bit. The most recent video surrounding Chainlink was on Chainlink 2.0 and how bullish it is for the ecosystem. Chainlink really is an integral part of all cryptocurrencies, and I really do believe in it. One big thing that I just did is I used to have about 10% of my crypto portfolio in Bitcoin. However, I decided that at this current price with the Chainlink BTC ratio, I decided that I was going to transfer all of my Bitcoin into Chainlink. It did look like it was approaching some sort of a bottom, and I decided I would pull the trigger and turn all of my Bitcoin into Chainlink. Now, the reasons for this are simple in my opinion. I just don't see the fundamental value that Bitcoin has compared to other things like Chainlink. I do like to be able to value certain assets and certain cryptocurrencies, and Bitcoin is all based off supply and demand. I'm not saying Bitcoin won't appreciate in the future. I do think Bitcoin still has a good future ahead of it, but it's just really difficult to value when it's all supply and demand. Chainlink at least has a lot of fundamental value, and Chainlink does need to be used as collateral when people are using Chainlink price feeds. Chainlink can be used for staking, and Chainlink token is actually used for a whole ton of stuff. So as a direct result, I could see a lot more future value in Chainlink, and I decided to do it. Obviously, Chainlink is a lot more volatile than Bitcoin, so this could be viewed as a riskier move. However, I actually view it as a less risky move, but for most people, I would say this is a more risky move because of the volatility. So it is one that I've decided to take, and I do think it will play out well in the long term. Now, Cardano is one that I'm not looking to add to right now. I'm really not looking to add to my ADA position, I'm just holding my current ADA. The main reason for that is I do think there are better deals right now in the market with Chainlink, and I always like to continue buying Ethereum. I like to buy Ethereum every single week when I get paid, and I will continue to do that, and then I do think Chainlink is a better option. However, Cardano is hanging around, and Cardano is doing quite well. This is my third biggest holding, and it is one of my favorite coins. I will say, I do think we are pretty lucky with Cardano. Like Ethereum, Cardano had that huge rally up in May, and then when it had a 50% correction, Cardano just went back down to the prices it was in at April. So I'm pretty relaxed with Cardano right now. It's sitting at around the prices that it has been for ages, and we haven't lost much money on Cardano. Despite one of the biggest cryptocurrency crashes ever, Cardano is still up from where it was a couple months ago. And also, when I say one of the biggest cryptocurrency crashes ever, I mean one of the quickest, sharpest cryptocurrency crashes ever. I do believe Bitcoin's 2-week candle was around 50% down, which was its biggest since 2013. So it was a very sharp crypto crash, but obviously it hasn't been a multi-year bear market just yet. Overall, cryptos are doing what they usually do, and it has been a pretty boring week. Nothing much has happened, it continues to trade sideways, and unfortunately I predict that it will continue to do this. Of course, I see this as a period to accumulate, others see it as a period to sell low and then buy back high later, but I'd rather not do that and accumulate when it's low right now. Of course, nothing in this video is financial advice, and you should know cryptos are inherently risky. However, I'm sure most people already know that. Thanks for watching the video.